Hello investors and welcome to my YouTube channel where I study the best investors and businesses from around the world. This week we take a look at Social Finance Inc., otherwise known as SoFi. SoFi is a mobile-first service which provides suites of financial products. On their website, they claim that SoFi is a new kind of finance company taking a radical approach to lending and wealth management. From unprecedented products and tools to faster service and open conversations, we're all about helping our members get ahead to find success. Whether they're looking to buy a home, save money on student loans, ascend in their careers, or invest in the future, the SoFi community works to empower our members to accomplish the goals they set out and to achieve financial greatness as a result. SoFi's personal loans have all these standard features of a 5-star lender: 0 fees, a wide variety of loan amounts, and flexible repayment terms. But this lender outshines the competition with a slew of special perks. SoFi members have access to free career and financial advising, referral bonuses, network events, and even complimentary estate planning, among others. Anthony Noto is the CEO of SoFi and a former COO of Twitter. Previously, he was a managing director at Goldman Sachs, CFO of the National Football League, and COO of Twitter and the head of Twitter Ventures. The company was founded in 2011. It's a mobile-first and member-focused personal finance company. It started with refinancing student loans, morphed into personal loans, and now what's been exciting about the last year is how rapidly we've extended into a number of new areas. They relaunched mortgage in early March and plan on doubling that business this year. Last week, they introduced the ability to do in-school loans. So if you're going off to college, you can now apply for a loan. Or if you're in college, you can apply for a loan. And then what we're here to talk about today is the launch of our native mobile app, which we did in the beginning of the year with 2 great products. The first is SoFi Money. It's the best of a checking and savings account with one high-interest 2.25%. It requires no minimum balance, no spending amount, and most importantly, no fees. You can spend whatever you want, whenever you want, right from your phone or a debit card or ATM card, which we do a 100% refund at ATM fees. And then last and most importantly, relative today, is SoFi Invest. The ability to invest in stocks, ETFs, robo-funds, and soon-to-be other asset classes. No commissions, no account fees. And the reason we're launching these 2 ETFs is we wanted to tell or make some ETFs for their members, millennials and Gen Z. SoFi seems like a jack-of-all-trades financing app, which recently went public through a reverse merger, also called an SPAC. SoFi has features such as checking accounts, credit cards, stock investing, student loan refinancing and origination, personal loans, mortgage refinancing, auto loan refinancing, and early payday. The vast array of products they offer and partnerships they have formed with other companies gives them the unique ability to cross-sell their products to customers and retain customers by doing so. For example, someone may come to SoFi refinance their student loans but end up banking and investing with them. This is because of a singular key factor: convenience. SoFi's target audience for their products are millennials who are financially savvy. What do we know about millennials? They value convenience. It's why people will use Grubhub, DoorDash, or Uber Eats despite the absurd fees and cold tendies they receive. Why people will use Amazon Prime to order stuff rather than go in person. Or why people will use Robinhood despite it going down every time something interesting actually happens in the market. This creates a dynamic where people will switch over their entire financial life to SoFi in order to simplify things, and make SoFi, in many ways, a super app in the making, similar to that of Alipay. SoFi felt like there wasn't a product in the marketplace that met their unique needs. First, it provides the users access to a diversified portfolio of companies. Second, it has 3 important characteristics. Number 1, no fees. All of your money goes into the fund, no management fees, and no fund fees. Number 2, low price, $10 per share. In order for our members to get exposure, diversified companies, we need to spend much more than that. Number 3, it's market weighted by growth. To understand the SoFi business model, it's important to understand that there are some products that they have where they won't make money and some products they will. Since millennials are their largest base, Anthony Noto believes that there are 2 significant things that they care about. Number 1, they are underserved in the consumer financial space. Number 2, they want to reduce friction and give them access to things they know and things that we know they like. So as an example, 40% of their users participate in a gig economy. So they launched a gig economy ETF composed of what millennials are spending their money on today. Being a millennial, they believe you have to invest. It's not a choice. Having enough money to do it, you want. If you want to get to that point, investing is an imperative. It's not a choice, and to do so, you should invest in a diversified portfolio of companies, and it's okay to also own stocks. If you're going to buy a single stock, you need to pair it with a diversified portfolio and make sure you understand the valuation, understand what the company actually does and how it makes money. Many of the companies that will go public are not going to generate positive cash flow for years, and that creates a lot of risk and volatility, and the novice investor needs to really understand that before buying. SoFi is a very unique business due to its jack-of-all-trades nature. It is hard to pinpoint a singular company that does the same thing. It shares aspects with dozens of companies, such as investing with Robinhood, Webull, Chime, Acorns, banking with legacy banks such as GS, JPM, BAC, WFC, and many other companies that parallel SoFi. With that said, SoFi has a massive advantage over other fintech platforms. Galileo is to SoFi what AWS is to Amazon. Galileo is a fintech API which powers many of the fintech companies we know and love, or hate, today. Companies such as Robinhood rely on Galileo to power aspects of their business, such as issuing debit cards and opening accounts. What this means is that those companies grow and gain members. SoFi gets a cut of that. Though Robinhood is the most well-known of the companies handled by Galileo, there are dozens of others who all rely on it to power their businesses. I hope you enjoyed this week's video on SoFi. Do you think SoFi has a moat in the fintech space, or do you think it's hard to tell just yet? Let me know in the comments below. Please consider subscribing to my channel. Also, if you enjoyed this video, or if you found it helpful in some way, then please remember to leave a like on it. This really helps my channel grow. So like this video and subscribe to my channel so that I can continue to make videos like this for you to enjoy.